This is the Royal Financial Investment Group. As always, this is your host, Prince Dykes, coming to you guys with another video. This video in particular is for, I don't know how I'm going to name it. It's about Ford stock and Tesla. You guys heard me talk about growth stocks in the past, and you guys heard me talk about mature stocks in the past, either way. But anyway, I don't have a lot of time. I definitely know you guys don't have a lot of time, so I'm going to jump straight into it. As you guys can see from the title, this is video probably going to be called, Ford stock versus Tesla, Tesla versus Ford, whatever. But anyway, I'm going to walk you guys through something that I see here with Tesla. As we all know, as we can see right here, when the market closed, Tesla was trading for 166 as of Friday, February, I think it was February 19th. Market closed on Friday, right? So as we also can see, look at the PE ratio, price to earnings ratio for Tesla is 0. One of you guys may say, man, why is it 0? So we're going to go here to fundamentals. You see the tab here? I'm scrolled up a little bit that says fundamentals, right? And it's something a lot of people don't pay attention to. So when you go here, you see the fundamentals on the evaluation. You see it say 0. So right here, you read this little block. It's not me. Tesla was not profitable in the last fiscal year. Tesla hasn't been profitable for a while. Granted, everybody says, hey, well, it's because they're using all their money for research and development. We're looking at what they're going to be like in the future, all this other stuff like that. But if you look at it right now, how is a company that is not profitable in the auto truck manufacturing business trading for $166? Now, this is $166. I'm going to go to charts because I like to show you guys exactly what I'm talking about. I'm going to back it up here for... You know what? It'll probably say it right here in Snapchat. Not Snapchat. I meant to say snapshot. But anyway, right here you see 52 week range. You can see its highest in the last year was $286. So why does Tesla, a company that's not profitable, trade for so much? So let's take a look at their earnings, right? Look at these earnings here. They're losing. You know, this is their 4-quarter earnings. They continue to make less. Now here comes the first quarter 2016. This is what they're projected to do, but this is what has happened. The last year, you see here where it's kind of up a little bit, but they're slowly on a decline. So one would say, why are they trading for $200, $300, $150, $60 some dollars, right? Another thing I want you guys to look at. We're going to go to revenue. Pay close attention to revenue. 2015, this is the money they brought into the company, right? It's that 5.3 billion. You guys can see that, right? 5.3 billion. You can pause and look at it a little bit closer. 2016, they're planning on 8.5 billion, which is cool. Now, look at Tesla here. This is their revenue. Revenue continues to incline. Look at that. Wow. On a steady upcline, right? This is a prime example of a growth stock that people are projecting. They're pretty much speculating. They're not looking at what the company has right now. They're looking at what it could be over here, right? But when you look at it right now, it's brought in 5.3 billion. That's cool. Let's see what it pays in dividends. Pays nothing in dividends. Right now, currently trading for $166. Not a profitable company. Why is it trading for $166? Now I want you guys to look at a company that we all know that's in the same exact industry. It's called Ford, right? Look at Ford. Pays 4.89% in dividends, PE of 6.65. Same exact industry. We're going to click on this auto and truck and manufacturing industry that Tesla's in. The average dividend in this industry is 4.46, which Ford is right at. The price earnings ratio, 7.5. Ford is at what it was, 6.5. So it's low to price earnings. Price earnings pretty much tells you what the stock is trading for versus its earnings. Usually a very high PE ratio lets you know that a stock is pretty much overvalued. But then again, this is the market. People don't pay for, value is what you get. Price is what you pay. People will pay whatever because they speculate what something will be in the future. Now let's look at revenue. We did look at we're not going to look at, we're going to look at fundamentals, right? We can see down here where its PE ratio has a pretty, look, PE ratio lower than 91% of people in this industry. Now we're going to go look at the earnings. Remember, I think it was 8.3 billion last year. They're projecting 8.5 or something like that. Let's see what Ford is at. We're going to look at revenue. Wow, last year they made 141 billion. Next year they're projecting this 146 billion. Tesla, 8 point something billion. But now you remember when we looked at the Tesla stock, it had this big increase in revenue, right? Versus Ford is kind of sitting here. It's not as sexy. It's just kind of sitting there. Now look at Ford, what it's trading for. $12, pays 4%. Same exact pays 4% in dividends. Only trades for $12, makes way more money. But you ask yourself, why does Tesla trade for 200, 166 some dollars? Biggest reason is because of popularity. Second biggest reason is because of speculation. Like take me for example. I'm 31 years old. I have a 4-year old son named Wesley, and he is 4 years old. If you revert us back 4 years, not revert, but go back 4 years ago, that would make me 27. That would make him 0 before my wife had him, right? So if you look at our potentially growth in 4 years, he has outgrown me dramatically because he was like the size of a football, and he is probably about what 3 feet tall now. So well, not probably a little bit taller than that, 3, 4 feet tall. When you look at me, I'm roughly the same. Now, why has he experienced so much growth and I haven't? It's because I'm a mature, grown man. Versus him, he's a little baby. He has a lot of growing to do. And that's how I compare Ford and Tesla. Tesla is that new little sexy thing, new little baby that's on the market, has all these cool gadgets, has SpaceX, has all these right in Silicon Valley with a popular CEO, Elon Musk, and everybody is speculating off of what it's going to be. And everybody's seeing this growth in revenue mainly off of what it can do and its potential. Versus Ford is that mature grown adult that has been around for hundreds of years and has pretty much matured nice solid blue chip stocks. So something to think about. Just want to pull out the paper. You guys can do a little bit more. Leave me your comments. What you guys think? Two companies in the exact same industry. Um, One is new and sexy. Got so much going on with SpaceX, with the new battery electric cars, battery homes. All speculation, but I'm not talking about what they can do. I'm looking at it right now. And it also shows you how companies trade for well over their value, and how companies, when the market crashes or when it takes a decline, companies get hit so hard because this is how companies are trading so much higher than what their real value is. So we just took a look at it. 140, you can stop, go back, and look at the early in the video. You can do it yourself. But anyway, I don't want to make this video too long. Till next time, you guys be safe. Peace.
Yeah.